Traders and investors are getting a little more clarity this week coming from the Fed in Washington. Let's check in now with Tim Biggam of Delta Derivatives. Tim, what signs are you watching in the stock market? There seems to be a bit more optimism, and bring us up to date on how those stay-at-home stocks are faring.
Yeah, absolutely. And certainly, Monday we saw that kind of rip your face off rally as, hopes for a vaccine kind of led the market dramatically higher, which kind of led to a end of the rally and those stay-at-home safety names, the Wayfairs and the Zoom videos of the world. So those stocks I'm a little bit leery of. I'm selling out-of-the-money call spreads on both those names. Now that rally has finally ended here, both of these had been going, pretty much parabolic. So I think we're starting to see glimmers, that things may be improving here, although I don't think the all clear is there by any extent. So I think this rally is probably a little long in the tooth here. So I'm a little less bullish than most going forward, but I am seeing some unusual option activity in a couple of names out there.
What are you seeing in unusual options activity, Tim?
One is a retailer, American Eagle Outfitters, AEO, saw huge call buying on, the past few days on the June 9 call, slightly out of the money options. Over 25,000 traded here. More importantly, the implied volatility, the price of the options went from 70 to almost 90. So I'm following along with that big call buyer, but doing what's called a buy right, buying the stock since it's under $9, fairly cheap, selling those expensive options to hedge, leaning bullishly with that call buyer about the same net delta position, which is kind of, a stock equivalent, but capturing the fact they overpaid to get in this position. Another one is Hewlett-Packard, where we just see unrelenting kind of call buying in front of earnings here. So following along, in the same way in that name, looking for that big call buyer to kind of, get out of the way for that implied volatility to come back in. Maybe take the trade-off before earnings, which are coming in the next week or so, and capture that implied volatility. Otherwise, I think, be nimble up here. I think the majority of the rally, at least short term, we've probably already seen. The rest of the gains will be hard to come by.
Stay nimble is right. Thank you so much.
You bet, anytime, man. Thanks.
For more Business First AM, check us out on social media. We're on Facebook, YouTube, and Twitter. And go to businessfirstam.com for where to see our show on TV.